Hi, Adam Sellers here. Today I'm going to go through our basic budget with tax estimator worksheet. Now you may have heard this referred to in our YouTube video series, our cash flow basics. Now you can see that by just going to our website, and down here is a link to our YouTube channel, or just type in mtaaccountants.com.au/YouTube. Head to our channel here and playlists and business cash flow basics. And in particular, video number 3. Just pause that. So if you've watched that video, you would have heard this spreadsheet referred to. Now it's a really basic budget with, on the side here, a section for estimated taxes. So you can see we're estimating GST, superannuation, pay-as-you-go withholding, and income tax. Got some instructions on the front. I'm not going to read through it, but I will go through everything it covers. So first of all, your business name up here. Got the version number of the spreadsheet there. So, when we release new ones, you might want to update it. Important that you put the correct year ending there. And of course, from that, it will filter and include all those dates there. Now, I will say that this spreadsheet is password protected. So there are a lot of cells that you can't edit. Generally, the yellow cells are the ones that you can. Now, these ones here, the names, it will also let you edit those, but generally you can only edit the yellow cells. So the idea here is that you put all your income and all your expenses for the next year down in this green section. To make it a bit easier, we've come up with what we're calling fixed and variable items. Fixed is just simply the same amount every single month. So we put in 12,000, that's $1,000 a month. And variable, you need to fill in the amounts per month. So all items, expenses have fixed and variable. Now you can leave them blank, that's no issue, only use one of them, but we've just got there to give you a little bit of flexibility over it. On the right here, so we've got the GST rate set at 10%, which is the rate here in Australia. I can't see that changing anytime soon, but if it does happen to change, you can just manually update it there to whatever percent it changes to. For each line item, we have a little drop-down box, yes or no. Does this item attract GST? Now, if you're a GST registered business, then most of your sales will attract GST. So it's just a matter of saying yes. Now you'll notice here I've got interest, no GST, because interest doesn't attract GST. So I've got that one set by no. Now, you might want to have multiple interest categories, or you might have other income that doesn't attract GST. Government grants, some government grants don't have GST. There's various other things that don't have GST. So when you're putting it in there, it's just a matter of having the right line item and having the right selection here. Okay, same deal for all your expenses. We got fixed and we got variable, and so on and so on. So it's a matter of going down, categorize your expenses into whatever categories suit you. You don't have to use the ones we've got here. And we do have a few blank ones down the bottom, other that you can also use, but you can rename any of these anyway. Now we do have wages and superannuation, and you've got more room for wages in case you want to do them per employee. Now, if you want us to create more, so you can put more employee, or you can just put a total. But if you want us to alter the spreadsheet to suit, we definitely can do that. A couple of things I want to highlight going down. So we've got a bad debts here set at 2% of income. It's good to budget for some bad debts because not everyone does pay their bills. And this here will just set it at whatever percent. So 5% of sales, it's doing 5% of total income. It's a pretty simple formula. C15, which is that figure, times B24, which is that figure. 2% we find in general is reasonable, but depending on your industry, you might want to alter that. Going down, we've got bank fees here with no GST and bank fees with GST. Bank fees generally don't have GST, but merchant fees do have GST. So, you might want to label that merchant fees or whatever works for you. But again, we've got that one set as no, but you can change it to yes, and you can change any of them to no. Going down, just some general expenses. Again, insurance. Now, insurance is part GST, so insurance has a stamp duty component, and the stamp duty does not attract GST. Theoretically, when you're putting insurance into your accounts, you should be splitting that up. Not many people do, but we've put that there just to remind you. Interest, we've got all of these as no because interest does not attract GST. What else we got? We got motor vehicle registration, no GST. Motor vehicle insurance, again, will have a part GST free component. Up to you how you want to deal with that. We've left this nice and simple. Going down, all pretty straightforward. So wages, again, wages don't attract GST. Don't put contractors in here, please. Put them in a separate spot. But they're all your wages with no GST. Superannuation, compulsory superannuation for the 24 year is 11%. This orange cell, you will have to change depending on what year you're doing. We haven't got it set up to automatically fill that out. Hopefully coming in a later version, but for the moment it's not there. And as you can see, if we put wages in here of, say, $12,000, it's working out 11% of that 1,000. And if I put in another 12,000, it's totaling all the wages up. I'm just going to increase that top income figure. Okay, so you can see we've got our superannuation in there. Now again, you can just add, let's say you're putting additional super in for certain people. Could be $500 for the year. Let's say it's 5,000. And again, you might be doing another 2,000 here randomly. And come the end of the year, you might put in a big lump sum. Other expenses, and gets us to total expenses and net profit. Now, pretty straightforward, totals it all up. So net profit for the year, $72,000. But the question is, how much tax do you need to set aside for that? So GST, we've calculated 10%, and we're saying that that is $12,000 for the year. So on your income and your expenses, you are paying in total $12,000 of GST. And while the profit's only 70 odd grand, and you might think 10% of 70 grand is 7,000, why aren't I paying 7,000 of GST? Simply because your wages and super, which are your biggest deductions in this case, don't attract GST. So if we go down, we've got 13,500 of GST on sales. There's only 500, 800, 80. There's only some small amounts of GST to claim going down through. 850 to claim against our 13,000 of income gives us 12,650 of GST to pay for the full year. Note that we've got superannuation here set aside, which is the total of those columns. So we've got superannuation of 29,000 for the year. Pay-as-you-go withholding. Now we do not calculate pay-as-you-go withholding on each individual employee. What we do is work on a set percent. Now you'll find that for a lot of businesses, 20% is a reasonable estimate of your total pay-as-you-go withholding. So of your gross wages, you will find that on average, give or take, 20% of that will be withheld as tax and the employee will get 80%. Rule of thumb doesn't work for everyone. If you're in a business or an industry that has high wages, so most staff are professional staff with high wages, that probably should be a little bit higher, maybe 25. And if you're in something like hospitality where there are a lot of casuals, a lot of staff that only work weekends or limited hours, that might be closer to 15%. What you could do is run a payroll report for the last financial year and just simply divide pay-as-you-go withholding tax by total wages to give you a percent, and that's the percent you put in there. But 20% rule of thumb is pretty good. So we've worked out 20% of each of these wage figures and just totaled it up down the bottom. And then tax here is income tax. Now at the moment we're running with 25%. That's the company tax rate, so that's what we're running with. In a future version, I would like to make this auto calculate, so have a drop down where you can choose between a sole trader and a company, for example. And if you're a sole trader, it would calculate the tax based on the total profit. Don't have that at the moment. We're using 25%. I'm hoping to put a table in there at some stage which will outline total tax on various incomes. So for example, I have a spreadsheet here that tells me, and I don't know if you can, how well you can see that, but say $100,000 taxable income, that's 24.19% total overall tax rate. So you're paying 24 grand of income tax on $100,000. So that 25% there, if you're a sole trader, for example, is relevant if your total profit is $100,000. In this case, it's 70, so 25 is probably a little bit too much. So we could make it 22.5. So you can adjust this to suit, and you can consult your accountant as to what figure is best for you. I'm going to leave it at 25% for the moment. So it's going on each line item. How much tax is there? There's 30 grand payable on that 120, but on this $5,000 expense, you save $1,250. Just simply goes down that all the way. We've got totals on the end, and then totals it up. So we've got 18,000 there. Don't worry about that figure there. It's this figure here, 65. So over the course of a year, you are paying $65,000 in GST, income tax, pay-as-you-go withholding tax, and superannuation. What we do recommend to clients is that they then make a goal to set aside $5,442 a month or $1,255 a week. Set it as a direct debit. Just do it for the full year. If circumstances change, if you have more, you can change it through the year. If business starts going a fair bit better than what you've projected, you can put a little more aside, or if things get a little bit tough, you can decrease it, but at least that's half the battle. Doesn't have to be exact, but you get a pretty good estimate of what it is, so that every quarter, when quarter comes around, you've got to do your BAS, you've got to pay your GST, your pay-as-you-go withholding, your superannuation. You've got money in an account there set aside. When the ATO are charging you tax installments in advance in those BASs, that money is also set aside. If the ATO is not charging you installments at this point, at least that money is aside for when you need it at year's end. So having it set aside makes life a lot easier, so you're not spending money that really isn't yours and is tax. There's not too much else to this spreadsheet. It is really simple. It's deliberately designed to be simple so that pretty much anyone can use it. It's not designed to be a full-on budgeter where you put income in and then you budget for 5% increases every month or something like that. That's not what this spreadsheet is. There are more complicated things out there. This is just simply something simple, really, really simple that you can use to help estimate your tax and give you an idea as to what your projected budget is, what your projected profit loss is for the year, but also every month, which will help you with cash flow. If there's any questions, you can call us. I will go through a disclaimer here though, that the spreadsheet is designed for us internally and our clients, but we do not guarantee that there's no errors in it. I put a lot of time into this to make sure it works, and I use this personally in our business, but that doesn't mean it doesn't make mistakes. Formulas are easy to make mistakes on. I've gone through, double checked it, but please do not rely entirely on this. Do your own checking. If you want to unlock the spreadsheet so you can go through and change formulas and adjust it, by all means, just contact us. We'll happily give you the password. But also, if you are using it, it's our work. If you're ever putting it on anywhere or showing it to anyone else, please give us a little bit of credit for it. We've put a lot of work into it. A little bit of credit for it would be nice as well. If you have any questions, if you have any improvements that you'd like to see, we're all ears. We'd love to see them. But otherwise, hopefully you can use this and find some real use out of it and help you put money aside and budget your cash flow better. Thank you.